Happy Friday, everybody. It's been a couple weeks since we came to you with an update here on the markets and the economy. Obviously, a lot is going on, a lot is changing very quickly week to week. But a couple of things we wanted to touch on this week. We've had a higher inflation report, which is probably not surprising given that energy prices have gone up so much, right? We're seeing it all the time. Price of gas is going up. Interestingly enough, if you strip out food and energy, right? So inflation is looked at two ways. There's the headline number, right, which was up about 3.3% year over year. And then 2.6% is what is called core inflation. Core inflation strips out food and energy because those are typically seen as more volatile. Certainly energy prices have been very volatile right now. The question is, if you look at what's happened on Wall Street, when the war, this war with Iran originally started, the markets went down quite a bit, but they've rebounded really in the last week or so, primarily when this so-called ceasefire started, which we're not sure if it will hold. But it seems like a lot of people in the financial markets are looking beyond this war and are pricing in not that much risk. Now, I would say that that's foolhardy for a couple reasons, not least of which is that we have a very, very volatile administration in the United States who can't even really keep to one script and has never been able to tell anybody why they got into this war in the first place, and certainly can't tell us how they're going to get out of it. The other thing is we have actors in the Middle East, Iran in particular, who are not going to follow the script that the Trump administration wants. And so I think looking beyond this and assuming that there's no more risk than your average blip on the screen, right? Maybe there's a fire at an oil refinery or something, I think is rather foolish, because I don't think that there's a great chance that these negotiations will lead anywhere. And I think it's going to be very transactional if it does, meaning that Iran now sees that it can put serious pain on the global economy and certainly the price of gas in the United States, which is going to mean that they're going to want something out of this. And it's not going to be very long-term in nature. So the disruption, the volatility is going to continue, and it's going to continue for a while. So I think what we really need to be worried about as we are looking to position portfolios here is, what does well in inflation? Well, stocks typically do better than bonds because bonds have a fixed income. What does inflation do if we're getting $100 and all of a sudden things cost 20% more? Well, that erodes the purchasing power of that $100. So we want to stay involved in stocks, even though it can be a little bit of a heartache as the market bounces up and down. But overall, we've got a better chance to outpace inflation in stocks than we do in bonds. Second, look at where you sit, look at your liquidity needs. If you have the need for cash in the next 6 months, we should know about that, and we should set that aside into very safe money market where we're going to make about 3.5% annually. That's much better than trying to ride it out in the bond or stock market and then have to sell it, and we don't know what that's going to look like in 6 months. Finally, goals. Every investment portfolio that we set up is goals based, meaning if your goals have not changed, we need to continue abiding by the same strategy we set up and the same asset allocation. If there has been a fundamental change, things like status of marriage, large inheritance, retirement looming, those are things we need to know about, because we need to have a conversation and see if there's something we need to do to adjust the allocation of your portfolio. Right now, what we are doing is we are looking for opportunities to buy as the stock market goes down, while keeping a good cushion in the bond market to help with some of those swings. Bonds are safe assets. People typically put money in bonds when they're worried. That pushes up the price of bonds. That makes those investments good when people are worried. So please reach out to us. We're happy to have this conversation with you about specifics in your account and in your goals, if that would be helpful. Have a great weekend. We'll talk to you soon.